The sad truth? 90% of advanced investing advice is regurgitated basics. Today, I'll show you 3 strategies that generated 23% annualized returns. Welcome to Investing Like a Pro, Expert Tips and Strategies. Today, I'll be diving into advanced investing techniques and market analysis tailored for experienced investors and professionals. As you already know, the markets are complex ecosystems that demand precision, discipline, and a deep understanding of both macroeconomic trends and micro-level opportunities. This discussion will focus on strategies to refine your portfolio management, optimize risk-adjusted returns, and anticipate market shifts with greater accuracy. Let's begin with portfolio diversification beyond traditional asset classes. As seasoned investors, you're likely familiar with the importance of spreading risk across equities, bonds, and cash. However, professional-grade diversification involves exploring alternative investments like private equity, real estate, commodities, and even niche opportunities like infrastructure or venture capital. These assets often have low correlations with traditional markets, which can act as a buffer during periods of volatility. Consider blending these alternatives into your portfolio using a strategic asset allocation model tailored to your risk tolerance and long-term goals. Now let's talk about leveraging data-driven insights for market analysis. In today's fast-paced financial environment, relying solely on fundamental analysis is no longer sufficient. Incorporating quantitative models and machine learning algorithms can provide an edge in identifying patterns and anomalies. For example, factor-based investing, focusing on metrics like momentum, value, or quality, can help pinpoint undervalued opportunities. Additionally, monitoring sentiment analysis from social media and news sources can offer early indicators of market sentiment shifts. The key here is to integrate these tools into your existing framework without losing sight of the broader macroeconomic picture. Speaking of macroeconomics, staying ahead of market trends requires a proactive approach to understanding global economic indicators. Pay close attention to central bank policies, inflation trends, and geopolitical events. For instance, shifts in interest rate policies can significantly impact sectors like technology or utilities, while currency fluctuations might create opportunities in international markets. Use this information to tactically adjust your sector allocations or hedge against potential downside risks. Remember, the goal is not just to react, but to anticipate and position yourself accordingly. Finally, let's address risk management, a cornerstone of professional investing. Beyond setting stop-loss orders or maintaining a cash reserve, consider employing advanced techniques like option strategies for downside protection or volatility arbitrage. For example, protective puts can safeguard your portfolio during downturns, while writing covered calls can generate additional income in sideways markets. Additionally, stress testing your portfolio under various scenarios, such as a sudden interest rate hike or a geopolitical crisis, can help you identify vulnerabilities and reinforce your overall strategy. In conclusion, investing like a pro requires a blend of sophisticated strategies, cutting-edge tools, and a deep understanding of market dynamics. By diversifying into alternative assets, leveraging data-driven insights, staying attuned to macroeconomic trends, and refining your risk management practices, you can elevate your investment game to the next level. Remember, the financial markets reward those who are disciplined, informed, and forward-thinking. Thank you for joining me today, and I look forward to guiding you further on your journey to professional-grade investing.